In this presentation, we will generate, analyze, print, and export to Excel a profit and loss report, which can also be called an income statement within QuickBooks Online. Here we are in our free test drive file for Craig's Design and Landscaping. We're going to go on down to our reports down below. We're going to take a look at the reports. Now, the profit and loss report, standard profit and loss, will almost always be in your favorite reports, or they should be, because they should be one of our favorite reports that we look at all the time. But also, they're going to be in the business and overview reports. If you scroll down, you've got the balance sheet reports, then you've got the profit and loss reports. We're looking for basically the standard profit and loss, which has a little star by it right now. And so we're going to be picking up the profit and loss report. That's the one we want. This is the other report, the other financial statement report, other than the financial statement, the balance sheet report, which is the core report. We want to be working with the profit and loss reports all the time. You're going to have that open a lot. We're going to scroll back up top. We're going to be changing the dates up top from 01/01/19 to 12/31/19. Then I'm going to run that report. So we're going to run the report, and that'll give us our data down below. There's nothing currently in this practice file for 2020. The data's in 2019. If you're seeing this in a later point in time, it's possible that the practice file had moved the data to 2020. So just be aware of that's probably the same data that they'll put into 2020. In any case, we're then going to copy this. We're going to right-click the tab up top, and we're going to duplicate that tab. So we'll duplicate it. So now we're going to have the two tabs. Now remember that the profit and loss report is going to be our second major financial statement report. Every other report we look into, so I would actually give them a separate distinction in your mind. When you see profit and loss and the balance sheet, those are financial statement reports. And those are kind of the parent reports. All other reports, which I would have, sub-reports, or those is what I would think of as reports, whereas these two are basically financial statements. All other reports are typically going to be some subset of these major two reports. The only exception being the statement of cash flows. That's another major financial statement report, but not one that you're going to be having open all the time pretty much when you're working with the data. So here we are. We have our profit and loss report. I'm going to then close the hamburger to the left-hand side. I'm going to make this a little bit larger by holding down Control and scrolling up a bit. So there we have it, and there's our standard financial statement. Now let's break down the components of the standard financial statement as we did with the balance sheet report. We want to understand what the differences and the similarities are between basically a profit and loss within QuickBooks and what would be known to like someone else that works or studies financial accounting. If you take a financial accounting class, if you learn accounting concepts, then what are the differences between basically a profit and loss report that you might learn there and what you would have in income? Why are those differences in there? What is the terminology of basically accounting terminology that's going to be universal to anyone that knows accounting? What's going to be the terminology that's going to be distinct but necessary for those that just basically know QuickBooks so that you can communicate with those two different individuals? And then finally, how does the profit and loss statement structured so that we can understand how it will tie out to the data input that will be put into it, and how we can put the data input in then more effectively. So let's do the same thing we did before. I'm going to hold down Control and make this a little bit smaller, and let's minimize everything that we can and get this thing down to its bare bones. So I'm going to basically hit these little triangles until there's no triangles left to expand. So we'll remove everything, and this is going to be like the bare bones of the profit and loss report. So let's think about this from top to bottom. We got obviously the name of the organization. Then we have the profit and loss report. Now note this is the first and major thing that's going to be different than if you learn financial accounting. Most financial accounting aren't going to call something a profit and loss report. They will call it an income statement. So those things are in essence equivalent. QuickBooks calls it a profit and loss report. It's basically the same thing as an income statement report that you would learn in financial accounting. That's the first main distinction, and also it's one of the first main things that you can think about if you want to customize within your system, because some people, people just get used to terminology, so it doesn't really matter, it's just a name. So income statement, profit and loss. But if you're working with somebody else, or if you want to differentiate yourself a bit, then you could simply change the name of the profit and loss report. It's like if someone else is really, likes the income statement, if you're working with auditors or something like that don't use QuickBooks but work in accounting, then they might not like profit and loss report because that's not what they're used to, and you can change the name of the profit and loss report to income statement. If you're working with other people and they like profit and loss, then obviously, you can use profit and loss. That's fine. If you want to pick one or the other, you might actually want to change it on the income statement to the income statement, because that can make you stand out a bit. It might be something that other people don't see in their reports, and so it could make you stand out. And like we said, you could just change the title and then memorize the report to do that. So then we're going to scroll down and we're going to say that we have the name of the report. That's going to be January through December. So remember, the income statement is a range. It's talking about performance over a time. Unlike the balance sheet, as we saw last time, which only has one date, really, only has one date on it. You still have the range up top, but the range up top on the balance sheet was only helping us in determining what the basically general ledger report, the transaction detail report, would be when you zoom into a particular account. It didn't matter what the beginning date was. It only mattered what the ending date was with regards to the actual statement that was generated. Here, on the other hand, we need the beginning balance, because if we change it, for example, if I was to change this date range to, let's see, the bottom line number is 1642, and I change it to December 12/01/19 and run that report, then that indeed does have an effect on the bottom line number down here. So that's gonna change. So it's not like the balance sheet. In that case, this is performance. How did we do over a range of time? I'm gonna change this back to 01/01/19 and run that report. Then I'm gonna minimize everything up again. So we got the income, cost of goods sold, and so there we have it. Okay, so then the other thing you could, that may be a little bit different here, is notice what it says here, January-December 2019. Now, if you think about normal financial statements that would be run quarterly or monthly or yearly, oftentimes in financial accounting, you'll hear the term, for the year ended. For example, here, instead of January through December, it would say for the year ended, December 31st, 2019, or for the month ended, or for the quarter ended. So that's another kind of distinction that you might have on financial statements that you would see for financial accounting from here. And again, if you wanted that terminology, and it could help you to stand out if you're dealing with someone who deals with accounting, some people just like the terminology, and you say, well, maybe I'll give them that terminology for the year ended, for the month ended. If you're working with other people, clients and whatnot, that again is another way you could kind of differentiate yourself and say, maybe my reports are a little bit more professional in that way, because they kind of line up to what financial accounting textbooks typically have and whatnot. So you could change that terminology. For every time you wrote a month, you could say for the month ended, for the year ended, and for the quarter ended, and so on. So then what's actually in the income statement? It starts with income minus expenses. So the most basic income statement will be income minus expenses. Now, then we're going to have breakouts or subcategories of those expenses. And the biggest one's going to be cost of goods sold. So the income minus the expenses, the bottom line, of course, gets to the net income then. So if I was to then break this down, we're going to say, okay, income, what does that consist of? Now, most companies only have basically a couple things on income. They have sales, if they sell inventory, or services, fees earned, some kind of just their income. If you're a service company, then you probably have one line item for basically income. You might name the income differently, and the actual income name for QuickBooks could differ. They might give you a different name depending on basically the industry. But in essence, we have the income accounts obviously increasing what would be the net income or increasing income. So here's their income accounts here. They have more information here because of the type of industry that they are in. So they're grouping the income accounts with probably more income accounts than most people would have. So then we get to the bottom line. That would be the total income. Now, if we sell inventory, either if we purchase inventory and sell inventory, or if we have a job cost system where we make inventory, in which case we have to deal with items in progress, as we're doing here. You see jobs are happening here because this is kind of a job cost system. We have jobs going on. So in that case, then you'd have to deal with inventory. Now, the inventory, when you sell it, is going to be your major expense. Your biggest expense is the cost of the inventory that you're purchasing and then selling. So in that case, then you would have cost of goods sold, basically an expense account, going to be normally like your biggest expense account. So then we're going to have the cost of goods sold. Then there's a subcategory of gross profit. Again, if you break down the income statement, it's really only income minus expenses typically. But then you can break down the grouping of those expenses in different groups. Now we have gross profit, which is basically a subcategory taking income minus the cost of goods sold. Then we have our other expenses here. So we have the subcategory of expenses. Notice that these two categories, cost of goods sold and expenses, as well as income, are basically also broken out by the account types. So if I go back to the first tab, as we saw with the balance sheet, if I scroll down to the bottom and go to accounting and the chart of accounts, then we note that we have our account types over here, and we have to assign an account type to each account. So, and those account types are going to include the income accounts and the expense accounts and the cost of goods sold accounts. So every time we make another account, we have an account type. Those account types, going back to the profit and loss, are what is helping us to, or QuickBooks, to break out this information to these different segments, to different categories. So if I scroll back down, the cost of goods sold, why does it have two cost of goods sold here? Why do I even need a subcategory when usually I only have one line item, possibly calling cost of goods sold? Because they need the account type here. So the account type is driving when you have this basically subcategory. You could have multiple accounts in that subcategory. Expenses, of course, is the most common category we will have. So if I open up expenses, you would think that, everything that's going to be qualified as an expense, most of the things we pay for vendors, will be some type of expense. We're going to categorize those expenses not by who we pay, not by vendor, but by what we use them for, what we consume them for. Advertising, auto, and so on and so forth. Now, within the expense category, we could have subcategories as they have here. We have auto expenses, and then if I open this up, this is going to be an expense account, fuel, but it's also a sub-expense account to the automobile expense. And the same for the job expenses down here. We have a sub-account. These accounts down below, or this sub-account here, is not another account type. It's just that they're using one account as a sub-account when they make another account that's then going to be housed right underneath it. And then we have the same for the legal and professional. This is the system using, or whoever set up the QuickBooks file. It's not a separate account type. They just used this account as a parent account to these other accounts that we'll set up. And we'll talk a little bit about that. We'll see that as we start to set up accounts when we make new accounts. Same here. Same for the utilities. Then we're finally going to get to the expenses. And notice the expenses is going to be the longest category. Expenses, the expense category is what's going to be used the most, because generally when we have an income statement, obviously we have only one or a couple ways that we earn revenue. Those things all go into one account. We have a bunch of different customers, but the type of revenue that we earn is pretty much the same, because we typically focus on one thing in our business in order to generate revenue. Everything else we need in order to generate that revenue is an expense, and therefore we're going to have a lot more types of expenses, even though the revenue number should be higher, hopefully, than the expense number. And then we have other expenses down here. Now, these are expenses that we might, for whatever reason, want to have a breakout between the normal expenses up top and then the other expenses, which may be not part of like normal operations. Therefore, we can break out other expenses and other income if we had it down below. And that's going to give us the total other expenses. And finally, we have, the net other income. And then finally, the bottom line here being the net income. So net income, bottom line number. So if you want to, so when you look at the income statement, obviously when you're going to look at income and then expenses and then the bottom line, you can think of it as basically a simplified income statement of all income minus the expenses typically, and then you break out the subcategories for more detail with it. Now, this bottom line number ties into the balance sheet, as we saw when we saw the balance sheet, because it's going to roll into basically the equity section. So let's take a look at that one more time just to see how these two reports are linked. I'm going to go back to the balance sheet, or back to the first tab, and then we're going to open the balance sheet by going to Reports. Then we're going to scroll down to the favorite report of the balance sheet report. I'm going to change the dates up top. I'm going to go back up top to change the dates from 01/01/20 to 12/31 I'm sorry, let's say 01/01/19. 01/01/19 to 12/31/19. And then let's run that report. And then if I scroll down to the bottom in the equity section, you will see the net income here of that 1642. Now, that's unusual, like we said before, because usually in a normal balance sheet, it'd be just part of equity. It would already roll over. We'd have to kind of know that. But here they're trying to break it out for you. So you can see here that you have the net income, and it's going to tie into the profit and loss. Now, note that if I ran the profit and loss for something other than a year, this number may not tie out properly, because it's basically going to roll out basically based on the fact that it's going to be a year end of 12/31. So when you start talking about like months or portions of a year, it may not be as easy to see how the net income over here is tying out to the profit and loss report. But if you're looking at it on a yearly basis, you can see how those things basically tie out. In any case, let's go back over to the profit and loss. There's going to be our net income. Now I'm gonna go ahead and export this. We're gonna do the same kind of process. I'm gonna do some formatting to it, and then we'll export it and print it just like we practiced with the balance sheet, just getting used to how we would format these reports and give them to somebody. So I'm gonna remove the footer down here. We're gonna remove the pennies, and we're gonna make the negative numbers bracketed. So I'm gonna go back up top. I'm gonna customize the report. I'm going to say that we're gonna remove the pennies. I'm going to make the negative numbers bracketed and make them red. Then I'm going to scroll down and to the footer, header and footer, but I'm looking at the footer, and we're going to remove the date, time, and report basis. And then I'm going to say OK. And there we have it. So same kind of formatting tools that we saw on the balance sheet for the most part. And then we're going to go ahead and print this report as a PDF and then save it as an Excel file, just as we did in our prior place. So I'm going to go up top. We could email it to somebody. We could export it as a PDF file. I'm going to get used to using that cute PDF printer because I really think that's good practice. So I'm going to go to the printing then, and then I'm going to choose the printer that we want. I'm going to use the cute PDF printer and then go ahead and print that. I'm going to choose where we want it to be. So I'm going to go back to the course data. I'm going to go to the section 3, which I labeled the income statement. And I'm going to call this a profit and loss report. And so we're going to say save. Probably should have put a date there, but I'm going to save that. And then I'm also going to export it as we saw in prior presentations. I'm going to export to Excel. We're going to open up that Excel export. This will help us to format if we want to do some further formatting within Excel. It also will help us when we have those multiple reports to combine the reports to one PDF file. Typically here then, I'll check the page layout tab to see that everything is on the same page. So it's all on one page. That looks good. I'm going to go back to the normal view. And then I'm going to go ahead and print this report. Now I'm going to add items to this report as we go, but I just want to practice saving it. And then I'm going to print it as a PDF report. So I'm going to go to the File tab. I'm going to save it first. File, Save As. Going to browse to where we want to put it. And I put it under a folder called Income Statement. So I'm going to put it under the Income Statement folder. I'm going to get rid of this huge name that they put on it. And I'm just going to call it Profit and Loss Reports. And let's put a date, 12/31. I can't put a dash, a period, 12/31. And then say Save. Now I'm also going to print it as a PDF and just practice this every time. So I'm going to print it as a PDF. And this would be a good tool if we had multiple, tabs here. I'm going to print it. And then if I had multiple tabs, I would be changing this to the print the entire workbook. And then it would show the entire workbook here. Then we're going to go to the print, and it'll print it as a PDF file. And so then I'm going to just save it. I'm going to save it just as it is there and save it. And that will allow us the three options we can use. Now, when we have multiple reports, it'll become will be more complicated. If we only have one report, it's pretty easy to send any way we want to send it, as a PDF directly or just saving it as a PDF and sending it out. But when we get more reports, then we'll practice in the same fashion as we did with the balance sheet reports.